Hello viewers, very good evening, and again this is PK Shikdar from PK Shikdar's Advanced Learning. Now I am going to take up with a topic in direct taxation which is termed as assessment of farm. Now let us proceed with this. Now in this assessment of farm, the learning sections are broadly categorized as under Section 10 subsection 2A, that is share of profit from farm is exempt in the hands of partners. Section 28, interest and remuneration treated as business income in the hands of partners. Section 37, interest and remuneration to partners is allowed as deduction in the hands of firm. Section 40, subsection B, restriction of deduction on interest and remuneration to partners. And Section 184, assessment of firm. Now come to the introductory part. A partnership firm is treated as separate entity under the Income Tax Act. It is assessed in respect of its own income and not in respect of the income of its partners. The partners, on the other hand, are liable for their own income and not of the income of the firm in which they are partners. Now let us discuss Section 184, that is assessment of firm. A firm shall be assessed as a firm if: point number 1, the partnership is evidenced by an instrument. It is a written agreement amongst partners. And number 2, the individual share of the partners are specified in that instrument. Point number 3, a certified copy of the partnership deed shall accompany the return of income in respect of which assessment as a firm is first sought. And there are certain optional agreements. That is, in this we are having number 1, interest on capital and loan contributed by partners, and number 2, remuneration payable to partners. If the conditions that I have said of Section 184 are satisfied, then interest and remuneration payable to partners are allowed as deduction in the hands of the firm. If the conditions are laid down under Section 184 are not satisfied, then interest and remuneration to partners shall not be allowed as deduction, though such firm shall be continued to be assessed as a firm and not as an association of persons. The income of the firm is subjected to 30% flat rate of tax. Surcharge is levied at the rate 12% if total income exceeds rupees 1 crore, if applicable, and education says at the rate 3% shall be levied accordingly. Now I am coming to tax treatment in the hands of firm and partners. Business income of the firm shall be computed by applying sections 28 to 44D. The firm is also entitled to following deduction under Section 37. The first one is interest on capital or loan contributed by partners. Section 40B allows a maximum deduction of 12% per annum simple interest in the hands of the firm. The deduction allowed in the hands of the firm is treated as business income in the hands of the partners. Point number two, remuneration payable to partners. In addition to capital contributed by partners to its firm, it also provides certain services. Services rendered by partners are entitled to remuneration, and following conditions should be satisfied. Number one, remuneration by whatever name called is payable to working partner. Number two, remuneration payable to partner is specified in partnership deed. And section 40B also specifies maximum remuneration which can be paid to partners. The amount of remuneration allowed as deduction in the hands of partners is treated as business income in the hands of partners. Remuneration to partners shall be distributed in the remuneration ratio itself. Section 40B, computation of maximum remuneration payable to partners. Under this, number one, maximum remuneration payable to partners depends upon book profit. Mind the term book profit. And number two, book profit is computed under the head business by making all adjustments under sections 28 to 44D except remuneration allowed to partners. Now I am going to tell you how we are going to compute the book profit. First, we are going to take net profit as per profit and loss account after making all adjustments under sections 28 to 44D except section 40B. From this, we are going to deduct interest allowed to partners under section 40B. Then whatever remaining, that is termed as book profit. Now here you have to remember one important issue. The issue is brought forward losses which falls under section 70 to 80 is not subtracted in computing book profit. Deductions under sections 80C to 80U is not subtracted in computing book profit. And as per the Income Tax Act, there is a slab on the basis of which the remuneration is actually being allowed to the partners. So we are going to discuss in the form of two headings. One is called book profit, another one is called limit. Now on first, rupees 3 lakhs of the book profit, limit is rupees 1,50,000 or 90% of book profit, whichever is more. And on balance of the book profit, it is 60%. Now, in the context of assessment of firm, we are also going to calculate the income of the partners individually that will be taxable in their hands. Remember, share of profit from the partnership firm that is exempted in the hands of the partners and on which they are not going to pay any tax. Now, practical problems and solutions, that is to be done in live class. It is not feasible in the context of YouTube video, and that is all about the assessment of farm governed under section 184. Now I would request the viewers to like the video, share the video, give your respective comment. You are also required to subscribe the video, and also you are requested to press the bell icon. So if you press the bell icon, then automatically all the notifications pertaining to new videos will automatically come to you. Now that is all about. So for the assessment of farms under section 184 is concerned. Thank you.